thank you very much, everybody, for dialing in. This is our second day in the city, delivering our results for the half year to the 31st of December. And we arrived yesterday in high spirits. We thought we had a great set of results to talk about with our investors, but I think there was a lot for us to explain in the numbers. So I'm going to let Liz take you through our presentation.
Okay, so we'll start on page 2 with the financial highlights. Just looking at it as a whole, we're very pleased to report another 6-month period of strong profits growth. During the period, sales grew by 8%, up to £8 million, and the underlying dynamics of that are overseas sales growth of 20%, up to 2.9 million, and in the UK, sales growing by 2%, which is less than we've seen in recent periods. That low rate of growth in the UK comes from a combination of two things. First of all, increasing market penetration for our products in the UK hospital base, but also that's alongside our strategic move to reduce our sales of high volume, low margin products. And you may have heard us speak about that in the past. It's been something that has been an ongoing programme for us for several years. The second key feature of these results is the share-based payment, a £1.1 million charge. It arose following the vesting of 1.2 million share options, designed to vest if the company hit certain profit targets over the course of a 3-year period. There were 3 tranches payable to granted to members of the senior management team, 10 members of staff, and Paul and myself. There was an override condition within that share option grant that if the share price hit £1.34 for 30 consecutive dealing days, then the whole of the grant would immediately vest. That condition was satisfied in January this year, and as a consequence there was a share-based payment charge which encapsulates the whole of the charge that we've put through in this 6-month period. So there'll be no repetition of it in half 2, and there is no planned repetition of it in future years. As we run through the rest of the financial highlights, then we'll talk about the numbers before share-based payments, which of course is a non-cash charge. So EBITDA increased by 27% to 1.9 million, and pre-tax profit is up 36% to 1.5 million in the period. EPS up 40% to 2.89, and we will be paying an interim dividend of 1.14 pence per share on the 1st of April. Of course, here we state that that is an increase of 95% in our presentation. There's a reason for that, which is we have increased our dividend payout ratio. So the interim this year is paying out 40% of the total dividend. And in addition, we brought the payment date forward to the 1st of April. And those 2 measures were taken, or decisions were taken, in light of the UK dividend tax that's being increased as of the 6th of April this year. In terms of cash, we've seen a significant increase in operational cash flow during the period. Net cash ended at 4.3 million, and today that same balance is in the bank. Moving on to the next slide. Here we look at the operational achievements during the period, and they centre around 2 specific areas. One is cost and margin control, and the other is investment in new business opportunities. So we have successfully implemented an enterprise resource planning system during the half year, and as a consequence of which we have seen a reduction in stock write-offs and wastage to the tune of £100,000. In terms of investing in future growth, we've achieved regulatory approvals for our products in Australasia. We were already selling into Australasia, but we've widened the product set that's now available to that market. And we've also achieved regulatory approval for several products in Saudi Arabia. And of course, our FDA submission programme is progressing well, and we'll go through much more detail on that later on in the presentation. The new product development pipeline is also moving forward well, although it isn't yet making a significant impact upon the numbers. Over on slide 4, just a reminder for those of you who are new to the Tristel story of who we are. We're an infection prevention and contamination control business. We have a proprietary chlorine dioxide formulation which we utilise to address 3 very distinct markets. The first is the human healthcare market under our Tristel brand. The second is the contamination control market, which is controlling contamination in critical environments, and that's via our Tristel brand. And the third is the animal healthcare market, which is veterinary practice infection prevention, and that's via our Anistel brand. Over on slide 5, you will recall, many of you, that we set ourselves 2 strategic financial goals in 2013-14. The first was to achieve £20 million of revenue by June 2017, and whilst doing so, to increase our pre-tax profit margin to from the 13% that we were achieving at the time to at least 15%. So that would have given us, in the financial year 2017, a pre-tax profit of £3 million. As a result of the slowing of UK sales, which we will talk about shortly, the first measure of reaching £20 million of revenue by 2017 is unlikely to be achieved. However, as a result of the gross margin improvements that we've seen and cost improvements, then we are on target to hit that £3 million of pre-tax profit, in fact a full year ahead of schedule. In parallel, we continue to focus upon long-term growth strategies, including product registrations and overseas and new product releases. On slide 6, we look at the product ranges. Here we've got the revenue dynamics in terms of human healthcare, animal healthcare and contamination control. Human healthcare, as you can see, grew by £400,000 in the year. All of that growth came from overseas. Animal healthcare grew by £100,000 in the period, and that growth came from the UK. And contamination control grew by £77,000 in the period, again from the UK. So the slowing UK sales are all human healthcare, and we'll look at the dynamics behind that number on the next slide. Overseas sales saw growth of 20%, in particular our Asia subsidiary, which covers our Hong Kong and China subsidiaries. Here we saw growth of a headline growth of 70%. Now, if we look at that in terms of a constant exchange rate, then it reduces it down to 52%. But nevertheless, it's a good growth number for that part of our business. In the same lines, Australasia, we're showing a 0 growth number in these 6 months. But again, if we revert back to constant exchange rates, then we'll see a 12% growth. So we still have got a growing business out in Australasia. In fact, if we move the impact of foreign exchange movements, then we would have seen growth in our overseas business of 22%. Over on slide number 7, looking at the revenue detail, we can see where that movement is. So top section is UK sales, second section overseas. The human healthcare line we break out into outpatient instrument disinfection. Here, in a period-on-period growth, was £74,000, which is 3%. This line encapsulates our wipes sales, and those wipes are used within 3 key clinical areas within the hospital: the cardiology department, the ENT department, and the ultrasound department. Within cardiology, we have annualised sales of around about £700,000, and we've hit now 95% market penetration. There's not a lot more we can do in that area of the hospital. Within ENT departments, we have annualised sales of £2.8 million, and we've reached 78% market penetration. There's probably a little bit more we can do there, but not a huge amount. In ultrasound, our sales are £1.2 million, and we've hit 50% market penetration. There's still growth on this line of our revenue detail. There's still growth in ultrasound. Looking at the second line down, critical surface disinfection, here we saw growth in the period of 6%. That annualised sales for surfaces is around about 1.5 million. And we have captured 25% of NHS hospitals with this product set. So again, a lot of growth for us to take up in the coming years. I have to say, for the first time in many years, selling into the NHS has become very, very difficult. It is the NHS is without doubt in financial distress. So the speed at which we can capture that area, that part of the business, will slow.
Yeah, I agree with that entirely.
Looking at the next line down of human healthcare, the other line, this is where we have seen a decline. This is the only area of our business where we're actually losing sales, and there's a key reason for that. That line includes all of the human healthcare non-chlorine dioxide products that we inherited from our previous activity as a contract manufacturer. When we took over the direct sale of that area of business, we took on all of the products using non-chlorine dioxide active substances and continued to sell them directly into hospitals. I believe there are 15 active substances that make up that product set. Each of those active substances will require regulatory approval under the Biocide Products Regulation, which is coming into effect on a rolling basis over the next 3 to 5 years. Of those 15 substances, we would have to carry out an assessment as to whether or not the revenue and, more importantly, the profit from those products guarantees or validates the investment that would be necessary to get approval under the BPR. Every single active substance that we have to register will cost us between £70,000 and £100,000. So the last 6 months have included our review as the deadlines have come up for submission of into the BPR. We've had to review each of those substances and the product lines and establish whether we want to go ahead with them. And in some instances, and there have been 2 cases, we have decided to drop the products from our range. As a consequence, we have lost £200,000 from this category of sales, and as we look in terms of a full year impact, we expect that we will lose £700,000 to £800,000 of sales. But these are very low margin, in some cases loss-making products. So dropping them out of our range will have an impact of releasing up capacity within our factory and lifting our gross margin. It also gives us the opportunity to focus and redefine our business to a chlorine dioxide focused company, which is what at our heart we are. Looking at the bottom part of this table, then you will see the overseas sales, and there is still strong growth in our overseas business. There is a seasonality to this in a half-on-half respect. If we were to write a number to the left of the 2,580 sales, it would be half one for 2013-14, and that number would be 1,951,000. So you can see in terms of half one and half two, 1.9 million up to 2.5 million. Next year, 2.4 million up to 3 million, 2.8 million. Where will it go in the second half? There is still strong growth for this area of our business, and we are becoming a more overseas focused business, and that is where the overseas growth that our analysts are predicting will come from. Moving on to slide 8, here we show where gross margin improvements have come from, and just a reminder that gross margins have increased from 69% up to 71%, so there is a 2% margin improvement. I'll highlight here a typo on the slide. Animal healthcare rose from 61% to 69%. We've typed in a 2% margin improvement. Of course, it should be 8%. So where have those margin improvements come from? Well, we implemented an enterprise resource planning system during the 6 months. What that has helped us to do is gain efficiencies in terms of wastage and write-offs, where we've made the £100,000 saving in the period. And it also helps us with better planning of production and more intelligent buying. And as a consequence, over on the right-hand side, you'll see our stock holding table, which shows a reduction in stock holding of 25%. And that's a direct result of buying more efficiently and planning our production more efficiently. During the period, we also made an investment in manufacturing plant of £150,000, and that will provide a reduced unit cost of cost of product of £25,000 per annum. It also gives us a security in a source of supply of one of our key packaging forms. And to come in the remainder of the financial year and into the early part of next financial year is the semi-automation of some of our filling lines in Snailwell.
So on the next slide, we take a look at the regulatory approvals program that we have underway across the world. And with growth overseas of sales of 20% in the half, with overseas sales representing 36% of the total now, an ever-growing percentage of the whole, this really encapsulates, if you like, the feedstock for future sales growth of the business. Now, our regulatory approvals program is happening in these countries listed, but there are many countries in which we have yet to initiate a regulatory program. The most important new entrant into the slide is the United States, Virgin Territory for Tristel. And we've been communicating with our shareholders and actively working on a review and an examination of our chances of getting an FDA approval, or at least a regulatory body approval in the United States. It doesn't necessarily have to be the FDA to enable us to enter that very significant market. With a lot of testing of the most important products of our portfolio, a screening process to see which would have the best chance of meeting the very stringent requirements that are laid out in the United States. And this is from a microbiology perspective, first and foremost. We have selected one product format. It's what we call Duo. It's a foamer that dispenses our chlorine dioxide foam. And we are working actively on 2 use patterns, 2 labels. One is for the high-level disinfection of ophthalmic devices, and the second is for the high-level disinfection of ultrasound probes. We'll talk more about the United States on the next slide, so I'll now move on to the rest of the countries in which we are very actively involved. Now, as I say, some countries, as in Taiwan, we have submitted to the regulator 4 products for approval, 5 products for approval in actual fact, and we wait to hear the outcome of the submissions that we've made. In Australia, we have already a presence in the Australian market, a very successful presence, selling our wipes into the ear, nose and throat market. That's the approval that we received from the TGA, which is the equivalent of the FDA in Australia. Approval for our wipes for use on flexible endoscopes that are used in that arena, that clinical arena. Our distributor has established a very successful business. They've grown their business. They now have 8 people selling throughout the country, and when we first started working with them, shortly after the TGA approval for the wipes was received, they only had 2 people within the company. So our success is their success becomes our success. And we are now well advanced. We're just waiting for news on the submission with the TGA on an approval for our surfaces products, and then they will start to sell them to the hospital system in Australia, in which the Tristel brand has become well established. Saudi Arabia, progress since October. The sales that are highlighted in dark green with the key code number 4. That's where we actually, in the past 6 months, have received a new approval from the regulatory body, and we're well advanced in establishing a very fine business in Saudi. So, to turn to the next page, let's examine how we're faring in the United States and how we are progressing. As I mentioned, we have the Duo with 2 labels, very specifically and clearly labelled for 2 types of medical device, and we have put together a big body of science, testing, microbiological testing, toxicity testing, health safety documentation, rinsability, storage data, stability data. A whole raft of information has been pulled together with the guidance of a FDA expert consultant and with some micro labs that we're working very closely with in the United States. And the next step, which has been taken, is to submit that dossier to the FDA with a list of questions where we are asking them for their guidance as to methodology of certain tests, as to the applicability of the devices that we're targeting for a high-level disinfectant, and various different other science-related questions. We want their guidance to ensure that when we embark, following their review and discussion with us, that when we go in earnest to complete the dossier and do all of the testing, that we are going to generate data that they will be expecting to see and will satisfy their requirements when it comes to review. They've written back to us and confirmed that the information that we provide them is extensive enough, comprehensive enough to warrant a meeting, and I'm awaiting a letter from them or a date from them in which our delegation, including our consultant, will meet the FDA in Washington and we'll go through that whole process. Then we start in earnest on putting together the actual submission to the FDA for these 2 instrument use patterns, and we hope to have, or we plan to have that complete by the end of 2016. That workflow is under our control. We commission the work. We choose the labs and the consultancies and agencies that we work with. So it's a question of execution, but it should be deliverable by us. And then we have to make an assumption, because everybody asks, how long might it then take to get an approval or decision? I'm hoping it will be an approval, but a decision from the FDA. And our answer to that is in the summer of 2017. What the slide, I hope, conveys is that whilst we have focused and majored on Duo for ophthalmology and Duo for ultrasound, and our hope is that we will get an approval from the FDA, it is conceivable that at least the Duo for ophthalmology product format may be decided by the FDA that it sits with the EPA, in which case we have a different regulatory path to pursue, quite probably an easier one and a quicker one. But we wait for the FDA to give their opinion on the applicability of a 510K for ophthalmology. But we have other products that we actively sell in the United Kingdom and elsewhere, which we are now looking to get approval, if approval is needed, from the appropriate body. Not necessarily the FDA, the EPA, as is the case with Filter Shot and Rinse Assure, and some products, in fact, that aren't even regulated, and to move those forward so that we can start to do business in the United States. The big ambition is to have a United States commercialised business over the course of the next couple of years, and we're not banking on only one product format to achieve that.
Okay, so then we move on to our outlook and summary slide. And in summary, although we have seen a slowing in the UK sales growth rate this year, our strategy does remain to be a high growth company with a high profit margin. We will continue to generate sufficient cash to invest in long-term growth strategies and, of course, remain debt-free. But at the same time, we have an override that any cash that's not required for the operational and investment needs of the business should be returned to shareholders. And in that respect, we believe that the outlook for the company is very positive.
Great, thank you very much for, again, a very transparent presentation. Can I remind any of the audience who want to submit questions to do so? But we already have quite a few. Should we start with the UK? And we have thanks for the clarity that you brought to various sales within the UK. Could you sort of comment a little bit more about as much as you can, about the pressures within the NHS? Because you both sounded quite cautious looking forward, and could you give a sense of how that has correlated to your sales through the period? i.e., is it getting more difficult now? Was it a later development in the first half? And this is not a unique problem. It has been seen with many other suppliers to the NHS.
Absolutely.
The financial difficulties that publicised financial difficulties that the NHS is under impacts us to the extent of speed of adoption or speed of winning the argument that we work on with infection control teams to change practice in terms of instrument disinfection or the method by which they clean floors and walls. It impacts us with respect to the speed of adoption. Fortunately, across the board, across the whole piece, we have the buy-in from infection control teams in hospitals where we're still seeking to persuade management to adopt. We have their buy-in to support the case for adoption of a Tristel product. But what I think we see now more than ever before is the faceless, if you like, decision-making power resides in purchasing, procurement, in a way that I haven't experienced in the 15, 20 years that I've been working with Tristel and interfacing with the NHS. So the case that is so clearly and obviously made by infection control to adopt, I'll use an example, to adopt a very appropriate practice for an ophthalmic device which is coming into contact with the eye, could cause the transmission of conjunctivitis and worse infections from patient to patient. With a practice at the moment that is wholly inappropriate, the device is being maybe soaked in Milton fluid, which one might use in the home to disinfect and barely disinfect a baby feeding bottle. Infection control knows that practice should change, but to move to a Tristel Duo Foamer for ophthalmology means a spend that has never been encountered before. There's no budget line for it, and winning for the infection control team and the management of the clinical area of ophthalmology are finding it harder than ever before to get management to allocate funds to better practice. The arguments get won eventually, but they just are being strung out for ever longer periods of time.
Okay, thank you very much. Looking at the broader market, and again, we haven't commented that you've been very open in the past in outlining potential opportunities and market scale. And someone with a very good memory seems to recall that in 2014 you were looking ahead at the markets where you're active and thought that instrument decontamination could be a circa £90 million market based on an assumption of roughly 32 million procedures that might be generating £2.80 each. Naturally, the person asked is just curious how you think those two variables might be changing and what that means for the total addressable market.
I presume that was probably worldwide.
It was in the markets in which we have a presence. It was a piece of research that we did.
Okay, all right, but that was in key geographies. I remember it now. It was Frost and Sullivan did the work for us, and it was based on the number of procedures using certain medical devices like bronchoscopes or cystoscopes in neurology in China, Australia, Europe. I can't remember whether we looked at the United States.
I don't think we did.
I think those numbers hold true. The Frost & Sullivan carried out the research, and I think they're a very reputable and capable research consultancy. And the monetary calculation was based on £2.80. Well, we still achieve £2.80 for every wipe that we sell to undertake a procedure in those clinical areas. In fact, we charge more than that in the United Kingdom, because over time we have been able to push up prices. So I think that all holds true. It's just the pace and the time frames in which we can get there. 2014 sales in Australia were, I'm going to have to turn to Liz for some guide on this, but
2014 sales would have been £600,000.
And in this financial year?
There'll be £1 million.
And that is represented by capturing more of those procedures that sit and fall part of that whole 32 million. So I don't think it's invalidated, and very importantly, what we're able to charge per use of a wipe is still what we are able to achieve.
Okay, thank you. Share-based payments, just for clarity, Ben asks, I think, Liz, you made it very clear that the current scheme has all been expensed in the first half, but some of the research notes are looking forward to future potential charges, but at a much lower level of potentially £100,000 to £200,000 a year. Do you think those expectations are reasonable as much as people can look forward?
Absolutely, I would say they're reasonable and probably err on the high side. Just looking back at our history, we have had a share option scheme available to all staff, and it's one of the key drivers of our staff incentive package. And it generates a share-based payment on an annual basis and has been anything from £15,000 up to £100,000. So yes, I do envisage them continuing.
I should say, I'd like to add that this particular LTIP, which has vested, and the conditions that were set by the board after much debate, and it felt appropriate and well structured, it won't be repeated. So it's crystallised, it's come into being, but it's a once and for all thing, at least for the next 3, 4, 5 years. Yeah. And we'd like to go on the record to make that clear.
Okay, thank you. Right, moving over the Atlantic, naturally one or two questions about the US and the FDA. Again, thank you, Paul, for laying out the timeline for events that are under your control. I'm sure you don't see this outcome, but what would you see as possible reasons why the FDA would reject your submission?
It would be on the basis of incomplete or unsatisfactory data. If we get past this next hurdle of getting their clearance, that they accept a number of absolute fundamental gatekeeping elements to the submission, one of which is that the whole basis of the 510k process in the United States is based on predicates. Now, there is no chlorine dioxide high-level disinfectant in the United States market. There's no foam formatted high-level disinfectant in the United States market. But there are high-level disinfectants that have received 510k approval in the past, and we have to search amongst them for predicates, chemistries and formats for those chemistries which are as close as we can make a very strong argument would relate to chlorine dioxide in a foam matrix. And there are. Sterilox is a company, actually it was a United Kingdom company, they got approval for 510k high-level disinfectant quite a number of years ago, and their chemistry is chlorine. We're chlorine dioxide. Now, chemically, there are quite a lot of very significant differences between the two, but it's a chlorine species. So we feel pretty comfortable that we will pass that predicate test. We're a foam, which is a liquid in bubbles. There is a product that has been approved for high-level disinfection of ultrasound probes, an Australian company's product, and that's hydrogen peroxide that's been nebulized. So it's not a, if you like, solid liquid form, and a foam isn't a solid liquid form, but it derives from a liquid. So I think, in conjunction with the consultants, that those very important sort of fundamental points we'll navigate our way through with the FDA, and if we get that clearance, we've got to go, then it's all about the completeness of the data and the quality of the data that we generate.
Okay, thank you. And following on from that, I'll link a couple of questions together. One is if you could update us on distribution within the US in the event of approval, and how you see potential partnerships spinning out there. And I think related to that, Liz, if you might then cover that your existing cash balances and strong cash generation, will they be sufficient for you to execute your plans in the US without seeking additional funding?
Well, I'll address the first of the two questions. The devices that are two versions of our foamer are labelled for use on are ultrasound probes, and there's a set of ophthalmic devices called tonometers. There are two companies that dominate the world in terms of manufacture of tonometers, so I'm going to place my emphasis or my focus upon ophthalmology to illustrate the way forward as we see it. There are two companies that dominate the tonometer market worldwide, including the United States. One is an American company, one is a Swiss company. Outside of the United States, where we have no presence because we're not approved there yet, we work very closely with both companies in their overseas operations. We have proven that we have materials compatibility with their devices, which is a prerequisite for their being able to say to their customers, you can use Tristel foam on our device, on our tonometer. But it goes a lot further than that, the relationship. We collaborate with them in a co-promotional sense in some countries. In some countries, this particular Swiss company, I won't name it, I don't think it's appropriate, but the Swiss company has a distributor, and we sell our products through that distributor, and the Swiss company sells its products through that distributor. And I think the rollout, the very natural thing for us to do, it's been done by other companies in our field, is to work through their sales infrastructure in the United States, and we really do benefit their selling activity. They're selling a device, they've got a huge custom base already established. Their customers say to them day in and day out, and this is truthfully the case, how do we disinfect your instrument? And by combining with Tristel, they have an answer to it. So I think that's the commercial route that is almost certainly to be pursued by us.
In terms of cost, first of all, I'll talk about registration because it is a significant cost. So we spent £60,000 last financial year on some preliminary testing and engaging with consultants. In this half that we're just reporting upon, an additional £40,000, and we expect another £80,000 in the second half of the current financial year. That gets us to the point at which we are ready to start ramping up all of our clinical trials and or trialling and testing under GLP practice, and that will be the expensive part of the approval process, and we are factoring in between £400,000 and £500,000 to get us to the point where we make a full submission to the FDA. In terms of commercialising a successful FDA approval, we have no intention at this stage to set up any form of subsidiary or a presence in the United States. As Paul says, our initial thoughts are to partner with a manufacturer of the instruments on which our disinfectants would be used. And so we're taking a relatively risk-averse view on taking a step into the United States. We can't rule out what might happen further down the line, particularly if we continue down the schedule, as Paul has laid out to you, of products that may be appropriate for the United States. If we're building a business out there, then we will have to have a presence. But that's certainly not the position that we are looking at as we sit here today. So in terms of having adequate cash flow to cover regulatory approvals, absolutely yes, we're very confident. And in terms of commercialising, there will be no requirement as far as I can see at present.
Thank you very much. And just a quick follow-up on the dividend. We have an inquiry whether the increase is a little pedestrian given the very promising outlook. I think perhaps they're forgetting the special dividend not too many months ago. But is it more a case of you husbanding the cash reserves pending the US outcome, where you then might be able to make a more defined progressive statement on the dividend?
Well, the dividend policy is unchanged in terms of cover. It's 2 times, so it's driven by the EPS number.
I think it's worth stating that within the calculation of the dividend, which 40% is being paid on the 1st of April, we have a much higher tax rate in this period, an 18% tax rate as opposed to 13% last year. And in addition, we have a higher number of shares in issue, so the EPS number is diluted. So those 2 measures in themselves take a hit on the percentage increase in dividend, but our policy, as Paul says, remains the same. Decisions made around special dividends will be based upon cash reserves, and as you can see, our cash reserves are building.
Right, and just time for the last question. Looking forward from a happy shareholder in terms of the historic targets that you updated on, and they're very grateful that the bottom line forecasts were the ones that have been met or exceeded, as that's what's driven the share price. Are you likely to reinstate further 3 or 4 year targets in the near future, or is that rather dependent on the outcome of the US?
It's a difficult question, and one that's not resolved by our board at the moment, and we've met on a number of occasions during the course of the past couple of months to debate strategy and the recalibration and setting of new financial targets. Now, obviously, we have them internally, and one thing we took a very conscious decision about 3 years ago was to make them public. It was great when you hit them, and when you fall short of them, you kind of wish you possibly hadn't. But we're, I think, correct and right to be as explicit as we can about the future pathway that we want to take the company on. So I think we will. We need to do some recalibration, and we have also on the landscape a huge event ahead of us, which would be approval in the United States. And one of the things I think we've got to wrestle with and work out is how do we articulate a 3-year plan when such a large event could happen and crystallise within it. So how can we say we've got to work that out. And so maybe that's not a very complete answer, but I hope it's a very transparent answer. I think we should make clear to our shareholders what we are seeking to achieve. The other part of it was to make a 15% pre-tax margin even whilst investing in the United States programme. And that holds true, and we are achieving it. And in the 3-4 year period of time that the 2 analysts that follow us are writing on and making forecasts about, we are staying above that minimum threshold. It's the revenue top line that is maybe needs a little bit more thought. But I do want, we have this opportunity to speak to a large and wide audience. We as a management team are focused upon profit and cash generation. Of course we want high top line growth that feeds through into the future, but slowing in the UK, I'm not going to take any further view upon how that may unfold over the course of the next couple of years. There's still plenty of revenue growth for us. We have a very difficult backdrop as in the financial plight of the NHS. But our overseas sales, we have no market penetration or saturation issues to deal with in any country that we are present in, and we sell into 42 countries. We're pretty confident that that's going to continue at a lick.